It's been a really big sell-off for the pound over the last couple of trading sessions, down just over 8% at the worst point, falling to new record lows. And to us, this marks a clear loss of confidence amongst investors in the pound and the gilt market here in the UK. And the main trigger really has been the fiscal announcement from the government on Friday. We saw additional fiscal stimulus of up to 45 billion sterling, and that comes on top of the big energy price relief scheme that the government just announced. And then over the weekend as well, we also had the Chancellor stating that they're looking to do more fiscal stimulus next year as well. And I think this is becoming more difficult for markets to digest, that amount of extra government spending. And then on top of that as well, I think markets are concerned that this additional fiscal stimulus is inappropriate right now, given the economy is close to full capacity, so it could worsen the already bad inflation problem here in the UK. So to us, this is a big problem, a loss of confidence in the pound, and we do expect the Bank of England to have to react to this to try and restore confidence. One thing that they could do is to raise rates more quickly in an emergency rate hike, and potentially as well they may look to delay their plans to start actively selling gilts back into the market. Well, we did see last week Japanese policymakers step into the market for the first time since 1998 to buy the yen, when dollar yen moved up to the 146 level. Initially, this did have a big impact in helping the yen to strengthen. It pushed dollar yen down towards the 140 level. But ultimately, we don't think this will be a sustainable trigger of a reversal lower for dollar yen, mainly because the fundamentals are still not consistent with a lower dollar yen at this point. And by that we mean, if we look at the BOJ last week, they sent a very strong signal to markets that they are happy to maintain very loose policy, and they see no changes to their yield curve control settings. Whereas if we look at the Fed last week, they sent a very hawkish message saying that they're going to continue with this faster pace of rate hikes through the rest of this year. And really, to us, one of the kind of main reasons why dollar yen has been moving higher this year has been that kind of wide policy divergence between the Fed and BOJ. And we don't see that changing anytime soon. So I think while that story remains in play, dollar yen will remain under upward pressure. And I think at best, all Japanese policymakers can do at this point is to try to slow the pace of the move higher from here. So we do think we potentially could get back towards the 146 level and to see dollar yen move to fresh highs later this year.